Hi guys, welcome to Talking Money with Nonzi, personal finance made simple. When it comes to investing, a lot of people feel lost and overwhelmed by the variety that is out there. There is just too much to choose from, and where does a person even begin? Another challenge is that a lot of us are really busy. We have to go to work, we've got kids to raise, we've got people to manage, some people have got businesses to run and so on, and we really don't have time to do research and actually find stocks to invest in. But at the same time, we know that investing is important. We want to invest for our future, but we're just crippled by the choice. Where do we even start? Well, today I am going to simplify investing for you. I'm going to take away the guesswork and actually point out what you can invest in for the long term. And guys, by long term, I mean anything above 5 years. So I'm not talking about your goals for 1 year or for 6 months or 3 years. I'm talking about 5 years, 10 years, 15 years, 20 years, etc. So whenever I mention the word investing, your brain must immediately think 5 years and above. But before I get started with today's juice, I need you to quickly like this video by giving it a thumbs up and subscribe to my channel. It'll really help me a lot. It'll show that you appreciate what I'm doing, and it'll also help the YouTube algorithm so that more people find this video when they are searching for topics such as these. Okay, thank you very much. If you want to invest for the long term, but you don't know what to invest in, and you are too busy to spend hours and hours and hours reading about different companies and what to invest in and the pros and the cons and the whatever it is, this is what I suggest. I suggest that you invest in low-fee ETFs. ETFs are exchange-traded funds, and they are sold on the stock market just like normal shares. Think of ETFs as a list or a basket of shares grouped together and sold as one product, the exchange traded fund. Please click on the link that is appearing on your screen right now if you need a more detailed explanation of what ETFs are. ETFs don't need a lot of upfront and ongoing research. All you need to do is just a little bit of reading to choose your ETFs upfront. But after that, all you need to do is to keep on investing in the same ETFs every single month and let time and compound growth multiply your money until you reach your goal. Your money grows without the need for you to do any extra research and analysis, without you ever needing to check financial statements or read earnings reports of companies. You can carry on with your life and still get your fair share of the stock market returns. Now, the next question that people are probably asking is, okay, so which ETFs should I invest in? Because on the JSE alone, there are more than 80 ETFs, but which ones of those 80? Well, there are actually two criteria that I use to choose my ETFs, and you can use this criteria as well if it makes sense to you. Criteria number 1 is that I choose broad market ETFs. Criteria number 2 is that I choose low fee ETFs. Let's talk about criteria number 1. What do I mean by broad market ETFs? By that, I mean ETFs that include companies from most or all sectors that are represented on the stock market. These would be ETFs that include mining companies, property companies, banks, insurance companies, retail companies, construction companies, energy companies, telecommunications companies, technology companies, pharmaceutical companies, etc. Broad market ETFs don't discriminate based on sector or industry. They just have everything in there. Unlike sector-specific ETFs, which focus only on a specific sector. For example, there are property ETFs, which are baskets of property companies only. There are financial ETFs, which are baskets of financial companies only. There are technology ETFs, which are baskets of technology companies only. I am sure you get it, right? So someone once asked me and said, why is my technology ETF doing worse than my broad market ETF, like the top 40, for example? And I said to them, the reason is because the technology ETF is concentrated in technology companies only, while the broad market ETF has companies from all sectors. And so if something bad happens to the technology industry, then your industry specific ETF, the technology ETF, will be more negatively affected compared to the broad market ETF because it's got many other industries represented in that ETF. Now, let's talk about criteria number 2. What do I mean by low fee ETFs? By low fees, I'm not talking about the price that you pay when you buy the ETF. By low fee, I mean choosing ETFs with a low TER, a low total expense ratio. Now, what is that? What is a TER? Basically, a TER is an annual fee that is charged by the ETF managers. The lower the TER, the less fees you pay. The higher the TER, the more fees you pay. So based on criteria number 1, which is broad market ETFs, and criteria number 2, which is low fee ETFs, I have come up with a list of ETFs that you can buy in your TFSA, your ZAR account, your USD account, or your Australian dollar accounts. Okay, so this is the spreadsheet that I came up with, and it lists all the ETFs that fit my criteria. Number 1 criteria is low cost. Number 2 criteria is broad market, meaning these are not sector specific ETFs. These are ETFs that have got companies from all sectors on the stock markets. Okay, so what you see from row number 3 to row number 13, those are all ETFs that you can buy inside your TFSA or your ZAR accounts. I prefer to buy my ETFs inside of my TFSA account. If you still don't know what a TFSA is or how it works, please watch one of my previous videos where I go into detail about TFSA accounts. So the first 4 ETFs are top 40 ETFs. One Invest Top 40, F&B Top 40, Satrix Top 40, Signia iTrix Top 40. So all of these ETFs are exactly the same. They've got 40 largest South African companies from all sectors on the Johannesburg Stock Exchange. So since all of them are the same, which one would you then go for? Well, you look at the TER, which is the cost. And I said the lower the TER, the better. So One Invest Top 40 has got a TER of 0.29. F&B Top 40 has got a TER of 0.13. Satrix Top 40 has got a TER of 0.1. And Signia iTrix Top 40 has a TER of 0.19. I highlighted Satrix Top 40 because that's the cheapest one with the TER of 0.10. The next ETFs that you're seeing are S&P 500 ETFs. So One Invest S&P 500, CoreShares S&P 500, Satrix S&P 500, and Signia iTrix S&P 500. All these ETFs, they're exactly the same. They've got 507 large companies from all sectors on the New York Stock Exchange. And again, to choose which one to buy, you look at the TER, and the Signia iTrix S&P 500 has got the lowest TER of the bunch of 0.19%. And again, you can buy these ETFs in your TFSA or ZAR account in rands. The next 3 ETFs are more diverse. So the top 40 ETFs have got companies from the JSE only. The S&P 500 ETFs have got companies from the New York Stock Exchange only. But these 3 ETFs have got companies from all over the world. So F&B Global 1200 Equity Fund of Funds ETF has got 1,200 large companies from all sectors, from 30 developed and developing countries. The TER is 0.43. Satrix MSCI World ETF has got 1,546 large companies of all sectors from 23 developed countries only. The TER is 0.35%. CoreShares Total World ETF has got 9,343 large, medium-sized, and small companies of all sectors from 49 developed and developing countries. The TER is 0.29. That's why I highlighted it. Number 1, because it's more diverse, it's got more companies, and the companies are large, medium-sized, as well as small companies as well, and 49 countries. Compared to these two, the F&B Global 1200 has got 30 countries represented, whereas the Satrix only has 23 countries represented. Next, these are the ETFs that you can buy in your USD or American account. There's the Vanguard Total Stock Market ETF, VTI for short. This ETF is a group of 4,139 large, medium, and small companies from all sectors on the stock exchange. The TER is 0.03%. There's also the Vanguard Total World Stock ETF. It's got 9,343 large, medium, and small companies of all sectors from 49 developed and developing countries. The TER is 0.08. So guys, this VT, this Vanguard Total Stock ETF, is exactly the same as the Core Shares Total World ETF. And that is why I say you don't have to buy all of the ETFs. You would do just fine if you just bought the Core Shares, because the Core Shares invests in the exact same companies as the Vanguard Total World Stock ETF. The reason why I'm mentioning this is that some people who are not from South Africa, Lesotho, Namibia, or Eswatini, they don't have access to the South African market. They only have access to the US dollar market as well as the Australian dollar market. If you have access to your Core Shares Total World, just buy it in your ZAR or TFSA. It's cheaper because you're using rands and you don't have to convert your rands into dollars. And then there's also the Vanguard S&P 500 ETF, which has got 507 large companies from all sectors on the New York Stock Exchange. The TER is 0.03. Of course, I highlighted VTI because it's got large, medium, and small companies, 4,139 of them. So it's definitely more diverse than the Vanguard S&P 500. These are the ETFs that you can buy in your Australian account, your AUD account. There's the Vanguard Australian Shares Index, VAS. This one is an ETF made up of 300 large, medium, and small companies from all sectors on the Australian Stock Exchange. The TER is 0.1%. There's also Beta Shares, Australia 200 ETF. This one has got 200 of the largest companies from all sectors listed on the Australian Stock Exchange. The TER is 0.07. The reason why I didn't highlight it is because it's only got large companies, whereas VAS has got large, medium, and small companies. But the difference is really small. Whichever one you buy, you'll still be okay. And then there's also Vanguard US Total Market Shares Index, ETF. This one is exactly the same as VTI. It's got 4,139 large, medium, and small companies from all sectors on the New York Stock Exchange. Again, you don't have to buy it. This is just highlighting for those who might not have access to the South African market. Now, the next question that many people ask is, how much should I invest every month? Well, how much you must invest depends on three things. Number one, the estimated rate of returns of your ETF. Number two, how much money you need at the end. And number three, how much time you've got left. First, let's see what we can expect in terms of ETF returns based on their past performance. But guys, please keep in mind that past performance is not a guarantee of future performance. Meaning, if an ETF returned 10% in the past, it doesn't mean it'll also return 10% in the future. The returns could be lower or they could be higher than 10%, but we use estimates based on the past to do our calculations. Otherwise, we would not be able to calculate anything. So let's look at the returns of the top 40. To find the returns of ETFs, we need to read their fact sheets. And this website called etfsa.co.za lists all the ETFs that are on the Johannesburg Stock Exchange. So here is Satrix 40. To view the fact sheet, you click on View. And we have to look for performance. So here is performance annualized. And it shows you the fund's performance for 1 year, 3 year, 5 year, and 10 year. The longer the time period, the better. So over a 10-year period, the Satrix 40 has returned 11.96%. Next, we're going to look at Signia iTrix S&P 500. To view the fact sheet, we click on View. Unfortunately, they only have data from 2018. I like a much broader view. I want to see a much larger timeline. 2018 is too short for me. I'm going to look at the index that the Signia S&P 500 tracks, and that index is the S&P 500. So I just went to Google and typed average returns of the S&P 500. I then clicked on the link to Investopedia. So according to Investopedia, the average annualized returns since adopting 500 stocks into the index in 1957 through to 2021 is 10.67%. So this is the average annual return of the S&P 500. Let's look at the returns of the core shares total world. And guys, because the core shares total world ETF is fairly new, there's not much data going back into the past, like far into the past. I'm actually going to use the index that the core shares total world ETF tracks. Here is the core shares total world ETF. TER is 0.29%. Let's view the fact sheet. Like I said, this is a very new ETF. It was only launched 17 May 2021. I want data going back beyond the state. So what I do is I look at the index that this particular ETF tracks, and that index is called the FTSE Global All Cap Index. So I went to Google to look for the returns of the FTSE Global All Cap Index, and this is the publication which I found online. And as you can see, the return per annum for the past 5 years has been 12.8%. So next we're going to look at the F&B Global 1200 Equity Fund of Funds. The TER is 0.42%. Let's view the fact sheet. Again, this was launched in October 2017. The timeline is too short. But what I want to see is which index it tracks so that I can go and check the performance of that index. So this fund tracks the S&P Global 1200 Index. So what I did is I went to Googled the S&P Global 1200 Index annualized returns, and this is what you get. So over a 5-year period, the S&P Global 1200 has returned 10.08%, and over a 10-year period, it has returned 8.62%. Next, let's look at the Satrix MSCI World ETF. The TER is 0.35%. Let's view the fact sheet. Okay, it says launch date was 25 July 2017. Again, the timeline is a bit short for me. I want to see a very long timeline. So I check which index this ETF is tracking, and the index that it's tracking is the MSCI World Index. So I went to Google, typed MSCI World Index annualized returns, and this is what I got. So you can see the performance starting from 2007 thereabouts, a bigger picture, and here are the returns annualized. So after 5 years, it returned 13.84%, 10-year return 12.15%, and since inception in 1987, it has returned 8.51%. Let's look at the returns of the Vanguard Total Stock Market ETF. Because the Vanguard Total World Stock Index ETF is not a South African ETF, you won't find it on ETF SA. So rather use Google. So I Googled VT, and as you can see, here's the chart for the Vanguard Total World Stock Index Fund. So you can see how it has performed over the years. For the annualized returns, I'm actually going to go to the Vanguard website. So I'm going to click on this link here. So the Vanguard page opens, and the ETF is the Vanguard Total World Stock ETF. The ticker symbol is VT. Here is the performance. The blue lines are for the ETF. So the 5-year performance has been 14.45%. 10-year performance 12.14%, and the returns since inception in 2008, the fund has returned 8.18%. Next, we look at VTI, which is the Vanguard Total Stock Market Index Fund. This is the ETF that has got 4,000 US shares in it. Again, we're going to go to the Vanguard website, click on this link. Here is the performance. Over 5 years, VTI has returned 17.98%. Over 10 years, it has returned 16.29%. And since inception in 2001, it has returned 9.04%. Let's look at the returns of the Vanguard Australian Shares Index ETF. For the VAS ETF, which is the Vanguard Australian Shares Index ETF, we also use Google because this is not a South African ETF. I'll click on this link which appears here. Okay, so the information about this ETF opens. Let's click on performance. The green bars are for VAS. Over 5 years, it has returned 8.63%. Over 10 years, it has returned 9.41%. And since inception in May 2009, it has returned 9.03%. Okay, so we have seen the returns of these ETFs. And guys, you do not have to buy all of these ETFs. You can just choose 2 or 3 of them and buy the same ones every month until you reach your goals. Next, you need to know how much money you need at the end. Are you going to need 10,000 Rand or 50,000 Rand, 100,000 Rand, 1 million or 5 million at the end? How do you know how much you need? Well, you need to have goals. Guys, the stock market can't tell you what your goals are. I can't tell you what your goals are. You need to tell us what your goals are, and then from there, you invest based on those goals. So for example, are you investing for your child's university fees? How old is your child right now? Which year are they starting university? How many years are left between now and then? And then you can start to do your calculations to work out how much you need to be investing right now in order to reach your goals in the future. Are you investing for your retirement? How old are you right now? At what age do you want to retire? I can't tell you that. The stock market can't tell you that. For you to be able to retire comfortably, you need to take your current monthly expenses and multiply them by 300. This means that if your monthly expenses are 10,000 Rand, you need 3 million to retire. If your expenses are 15,000 Rand a month, you need 4.5 million Rand to retire. If your expenses are 20,000 Rand per month, you need 6 million Rand to retire. So now the question is, why are we using our monthly expenses and multiplying by 300? Well, I'm going to leave the link to an article that explains why we do that. Why do we take our monthly expenses and multiply by 300? Just check the link in my description. So how much should you be investing right now for your retirement? Let's run the calculation. This is my favorite compound interest calculator. I'm going to leave the link to this website in my description below. I want you to come and actually do your own calculations using this calculator so that you can see and estimate how much you should be investing. So to use this calculator, you put in initial balance, which is what you have currently. Let's say you've got something in your pension fund or RA, EasyEquities account, whatever. That's your initial balance. Interest rate would be the average returns of your ETFs. So we've seen a range of different returns. We saw 11%, we saw 10%, we saw 9%, we saw 8%. I usually stick with 9% when I am doing my calculations. This doesn't mean that the stock market is going to give 9%. It's going to give more than 9% because in my calculations, I'm not including dividends. If you receive dividends and reinvest those dividends, they also count towards your compound growth, right? Number of years is in how many years you want to retire. So you put in the number of years remaining for you to retire. Then when it says compound interval, usually investments compound annually. So that's where you choose yearly. Then where it says deposit amount, this one, that's where we're going to play around because we're guessing. We don't know how much we should be investing every single month, but we're going to put different numbers to see and calculate if we hit our retirement number. So I'm going to do 3 scenarios. I'm going to start with a 25-year-old who has got a 0 balance. Interest rate is 9. Like I said, they want to retire in 35 years time when they are 60 years old. Guys, you don't have to retire at 60. You can retire much, much earlier than that. But obviously the implication is you should be investing much, much more money than somebody who wants to retire later in life. If you want to retire earlier, you have to invest a lot of money. So let's start with the 25-year-old who is actually left with 35 years before retirement. Their investments compound yearly. So let's say this person would be comfortable retiring with an income of 10,000 Rand a month. They actually need their investments to grow and become 3 million Rand. Let's start with deposits of say 1,000 Rand. So let's calculate how much that would be worth after 35 years. We are close actually. So a 1,000 Rand monthly investment after 35 years would give around 2,695,000. Let me change it slightly to just 1.5 and calculate 4 million. So basically a 25-year-old can invest 1.5 every single month, and if it compounds by 9% annually, they will actually retire with about 4 million Rand. Let's move on and change the numbers a bit. This time around, we're going to deal with a 30-year-old who also wants to retire when they're 60. So they are actually left with 30 years. And they also want to retire with 3 million Rand. 3 million Rand is going to give you an income of around 10,000 Rand a month. So I'm going to leave it at 1.5 monthly deposits. Let's just run the calculations and see. Okay, so not quite. I'm going to bump it up to 2,000 Rand. Let's calculate that. And we have 3 million. So a 30-year-old, if they invest 2,000 Rand every single month for the next 30 years, and those investments are compounding annually by 9%, they will retire approximately with 3.4 million Rand. What about a 40-year-old? Let's say the 40-year-old also wants to retire at age 60. It means they are actually left with 20 years. I'm going to obviously change this monthly deposit amount to 3,000 Rand. Let's calculate that. 1 million, so no, we are off the mark. Calculate that. 2.5 million, we are close. I'm going to bump it up to 4,500. Let's calculate that. 2.86 million, nope, not quite. Going to bump it up to 5,000, calculate. And we get our 3 million. These are approximate numbers. But what you can see already is that the younger you are, you can afford to invest smaller amounts of money and you will reach your target. You can even exceed your target. But the older you become, the more money you need to invest to reach your target. And guys, please remember that this is not financial advice. These are estimates to get you thinking on how you can think about planning your retirement. And guys, if you need the help of a financial advisor, please contact an independent financial advisor to help you to plan for your retirement. That's it for today's video, guys. I have simplified things for you by showing you what you can invest in and how much you can invest every month. It doesn't get simpler than this. And guys, remember, this is not financial advice. This is my own opinion. You can take it or you can leave it. If you need guidance with setting up your investing account, if you need guidance with things like setting up your budget, setting up your financial goals, getting rid of debt, etc., you can buy my eBooks that help you with that from my online store. My online store is called talkingmoneywithnosy.com. I'm going to leave the link to my store in the description below. Okay guys, I will see you in the next video. Bye.